Bit of a familiar face here, isn't it? Games Workshop. One of the first videos I ever did on this channel, but I didn't give it a fraction of the love that all the latest videos get. So I thought I would come back and take what I've learnt and all my new websites and show you exactly what's what. Now, a lot of you might be familiar with the Warhammer 40k universe. You can be forgiven if you don't. That's okay. The thing about the company is they talk about moats. I'm sure if you've watched any investing videos, you've heard of the moat. The moat is essentially, obviously it's a defensive structure around a castle usually. For business, it means that they have something unique, something that means you couldn't storm the castle or take the business over, a competitor couldn't get them easily. There's Games Workshop. They have their own universe for their models, for their rule books. Their shops and their fans are not only numerous, but very, very loyal. And every year they release new books, new models, keep things fresh, and they are a juggernaut when it comes to this industry. They have no one that's even close. The closest thing I can think of is maybe Hornby, and Hornby is train sets. So, okay, they don't got anyone that's really going to go for them. What does that mean? That means they're a very unique business to pick up for any portfolio. To be honest, if I was going long term with, a portfolio for I'm obviously going long term with my UK dividend one. I would love to feature Games Workshop. Now, I have a few qualms about the stock, and I chase a few other ones that are very undervalued at the moment. Games Workshop is one of those ones that I don't think is undervalued. I don't think it's undervalued. I don't think it's overvalued. I just don't think it'll ever get to the point that I'd be like, oh wow, that'll be real cheap to buy into it now, because it's just got such a great balance sheet. Now, I've been on this page for a while. Let's jump into who they are. Dividend yield of 3.83. Ticker symbol GAW on the London Stock Exchange. 2,600 employees. Revenue of 355 million and founded in 1975. British manufacturer of miniature war games, based in Nottingham. It's best known for Warhammer Age of Sigmar or Warhammer 40k, which would be the one that I personally would be familiar with. Of course, I do internet videos. Of course, I know what Warhammer 40k is. This is their website. We will be jumping to the investor section, but I just want to show you what on earth they do. Because I had a period a couple of years ago where I bought the models, painted them, did everything. Like I spent... must have been about £200 to £300. That most people gasp in this community. That's pennies. That is the amount of the length you can go to. Like it's sort of £50-60 for a set. I'm probably different now, but this tank. That's for example. Let's try and buy this tank. £52. Obviously, it comes comes like this. You have to cut them all out. Stick them all together, paint them. I mean, this looks amazing. I love how just seeing that, you're like, wow, that's that's amazing looking. And it's painted with the Imperial Fists yellow. It's all the decals. It's great. Trust me, to paint it to that level of detail takes so much time, effort, and tutorials. And you can actually go into their stores and they will help you paint. There's wee sessions and all. I went a few times and it was really cool. Pity it's just so far away from me and travel. I'd have to travel into the city, find parking and all. Bit inconvenient for me, but if you lived within the city or nearby, or you just were a complete fanatic, which is fair play to anybody doing it, you could just go in, and they're so focused on customers that you're in the store, you're painting, you can buy the paints, you can buy most of the tools there, you can buy more sets once you're finished. It's ingenious. It works so well. The more I think about it, I'm like, wow, that's amazing. They've got Warhammer Age of Sigmar, which is like a medieval one. Warhammer 40k, it's more of an in-the-future, futuristic one. Horus Heresy ties into that. They even have Lord of the Rings, Battle for Middle-earth. You can click into this, and you can buy models for Lord of the Rings. Look at the prices. That's a fraction of what you actually have to pay when you include paint, skill, time. It's insane how far you can go, but it's so worth it, and I love it. You know what? I can't give financial advice. I can give hobby advice. If you want something cool to get your teeth into, Games Workshop is pretty good in all belief. You'd think I own shares. Actually, probably. I don't know. I'll explain when we go into Simply Wall Street. But everything is based in books and lore. You talk about a moat for a company. How can you beat a company that's debt-free and has their own lore, their own making of painting models, so fan-focused, and they keep everything up to date and interesting? It's difficult. It's a difficult one to beat, for sure. Let's go on to the investor relations. A lot of you might be going, I wanted to see more, but listen, we've got to go into the financial side of things. In here, you can find everything, their business model, history, dividends, very important because that's what this channel is all focused on. Well, it's focused on investing, but I love dividends. Dividend investing is definitely the thing that pulled me right into investing again, and you can get your teeth right into it. Business model is simple. They make the best fantasy minifigures, I can barely speak there, to the world to engage and inspire customers, sell globally at a profit. We intend to do this forever. So if you buy one stock, I mean, it's forever, isn't it? Our decisions are focused long-term, not short-term. Simple, but every part of this statement is important. We make things. We are a manufacturer, not a retailer. We do have outlets and retail locations, and these stores show customers how to engage. They are a front end of our manufacturing business. So they basically supply direct to customer. That is a very easy, simple model. I think they own all their stores. They're not really franchised out. There we go. Again, another, no franchisees, straight to the customer. Kind of reminds me of Secret Labs. They're straight to the customer. Don't think they've stores, but you get the idea. Goes on into quite a lot. They do. It's a very, very large opportunity. They've plenty of room for growth, I'd reckon, in locations, and people join, a growing population. A lot of people do go into Warhammer. I'll be honest, when I went into it, it was because of a few friends, and they're still into it to this day. So, they have armies that cost thousands of pounds. You get a few reoccurring customers willing to fork that out continuously over years. Damn, that's some cash cow. Jumping over to Simply Wall Street. So, together with its subsidiaries, designs, manufactures, distributes, and sells minifigures all across the world. Earnings are forecast to grow despite all the economic turmoil. Earnings have grown over the last 3 years by nearly 23%. The snowflake analysis here, 6 out of 6 for company health. We'll see why that is. Dividend gets a 4 out of 6. Value is where it collapses at 1 out of 6. It's so... If you could buy this at a discount when you could have, this would have been an amazing investment, but it's never been, £100 is where it can reach. It's down at 61. It is the lowest it has been in a year. It's 40% down, but that still doesn't kick into the valuation, which is so annoying for me because it's such a strong company. I imagine they're going to do a stock split at some stage, because they're trading about £61. Normally companies in those higher digits do a stock split. That might happen in the future, because I always love buying into a company that's a bit less than £60 a share. That's just me and my sort of way of looking at investing. But future growth, past performance, we'll look at everything here. Only issues is the high level of non-cash earnings, we'll see why that is, and an unstable dividend track record. Again, we will look at that. Pay ratio of 15.6. Again, they don't have many competitors. Well, there's Hornby. I did mention Hornby. Don't know why Dr. Martens are there, but okay. Hornby trades at 32. Games Workshop's half of that. I don't know. There's not really, there's no competitors of real to speak of. So I'll take the pay as it is what it is, and it's not bad. I think that's the best thing to take. There's Racing Force and a few other. Okay, right. Well, there's a few people. Any better ones? Nope. We're not. Nope. Okay. Down here, they're overvalued. They're overvalued apparently by 21.4%. That's based on a discounted cash flow model. It is what it is. If they were at £50 or below, if they ever drop below £50, I'd be in there. I'd head first myself. No financial advice. It would be brilliant. But at the moment they're at £61, and I dare say they will probably rise in the coming years. Massive cash flow generator. Again, it's flawless in nearly every regard. Future growth, they're going to grow. Analysts predict. Great. Past performance, fantastic. Financial health, unbelievable. No debt, 233 million in equity, or their debt to equity ratio. Look at this, 71 million in cash and short-term investments, 100 million in physical assets, equity. Brilliant. Okay, let's go down to their dividend. This is where it gets a bit dicey. From 2015, they had a growing dividend every year until 2021, and they did cut it a wee bit. Now, the reason for this, I'm not 100% sure. Wonder, does it actually point out why that was the case in news? Oh, dividend increase. 45 pence per share. They're so far. Dividend will be paid. Oh, right, okay. Last date for elections for the dividend is 4th. When is their ex-dividend date? 20th of October. Okay, right. That's fair. Cash payout 61%. Ownership's interesting. A lot of insider buying. Great to see. Going down institutions. BlackRock and Vanguard sit at near enough 10% value in the company. And yeah, let's go on to Dividend Watch. Another free resource you can use to have a look into stocks. What I love about it is gives you a short introduction here. Their stock price, obviously, symbol and whatnot. You can go into the dividend, see the sort of yearly growth, 25% over the last 3 years. You can see here growing the pay. They're actually a quarterly pair too. Was that a special dividend? Hold on, I need to have a look as to why that may be. Over to not stock analysis, fundamentals. You can see in 2018 they had 59 million, 10% the next year, 8% the next year, 71%. COVID, they did really well because a lot of people were at home. What did a lot of these fans do when they were at home doing nothing, getting furlough? They were buying Warhammer minifigures to paint, which you can't really blame them. I didn't even think to do that over COVID. I'm an idiot. I probably should have. It would have been great. But again, there would have been a lot. I probably should have been doing videos like this over COVID. But here we are. Lesson learned. Jumping over to Dividend Max, another good resource that I use, free to use. We can see here, pay quarterly. And currently, if you had 100 shares, which would be about $6,000 right now, you'd have got a payment of £30, but in September you'd have got 90. I think is that just the way? Whoa, what happened there? That's a real jump in annual dividends. I need to see. So let's say every quarter, 2022, 65, 70, 90, 30, 45. How does it stack up? 50. So is this looks like it's on course for the best year? Would it be the best year? It's looking like it. Yeah. That's interesting. But yeah, jumping over to Trading 212. If you want to, look it up, you just go in. It's a brokerage I use for my portfolios and whatnot. GAW brings up Games Workshop. Bam. Again, charts, advanced charts you can have we dive into. You can obviously buy the stock. You can set a wee alert for it for a certain price. See when the market's open. You can go down, get a wee bit of company details, and then market cap, P. They also have some really useful graphs on revenue and net income to kind of give you how things have been going over at least the last 4 years. They are a massive cash flow generator, and in terms of financing, what have they been? 93 million paid out in dividends in 2022 alone. That's quite impressive, I must say. That's 30 million more than 2021. That's mad. Anyway, now that I think Games Workshop has got the loving video that it deserves, it can now go into the sort of the UK dividend portfolio again, and I can I think I'll unlist the older video. I won't get rid of it. I think I'll just leave it there as a past remnant. But yeah, let me know what you think in the comment section below. If you've seen the old video and you've seen this, have I improved? Is there more I can do? Let me know. Is there other stocks you want me to look at? Let me know. Is Games Workshop in your portfolio? If so, let me know why. Why did you pick it? When did you get it? And yeah, always interesting to chat in the comment section with you. So I'll see you all in the next one. Thank you.